Hello friends. If you are 65 or older and you are still seeing monthly fees, ATM charges, overdraft fees, or service charges coming out of your checking account, there are 6 of them you can stop paying. Most of the people who qualify are still paying every single one. Over 20 years of retirement, just one of those charges can cost you $6,000. The fee breaks are real. They are in the account schedules, the rewards tiers, and the federal regulations right now. But not one of them applies automatically. Your bank does not call to tell you the cheaper account exists. The overdraft setting does not turn itself off. The federal deadline does not send a reminder. Every single one requires you to take one step. Hello, friends. Not all 6 of these are the same kind of charge. Some are bank policy fees that disappear the moment you switch to the right account. Some are reimbursement perks buried inside a rewards tier nobody told you about. And 2 of them sit under federal consumer protection rules that change who owes what, but only if you know the rule exists and act before the clock runs out. Grab a pen. I'm going to go through all 6, one at a time, and I want you to mark the ones that already show up on your statement, because at least one of these is yours. Before we go any further, the rules I'm covering today change when banks update their fee schedules, when account tiers get renamed, and when regulators issue new guidance. The people subscribed to this channel find out when those changes happen, because I track all of it. Subscribe now and let's get into it. Now, whenever I cover a topic like this, people sort themselves into 2 groups in the first minute, and both groups leave for opposite reasons. The first group is the comfortable retiree. Decent savings, maybe a paid-off home, and they figure this video is for people in worse shape. The second group is living deposit to deposit, counting every dollar, and they've learned to assume the fee breaks and the better account types are always for someone else. Both of those assumptions are wrong about at least one of the items I'm covering today. And on every single one, I'll tell you exactly which group it helps most and why. Stay to the end because the last one is not a checking account perk at all. It is the rule that can force a bank to put money back into your account and refund the fees that followed it, but only if you move before the clock runs out. Let's start. Number 1, your monthly maintenance fee. Here is the misconception. If the bank could put you in the cheaper account, they would have done it already. They will not. Bank of America's own fee schedule says explicitly that linked accounts are not linked for pricing unless the customer tells the bank to do it. That sentence is worth reading twice. The bank does not volunteer this. Here is what is actually happening. Most of the major banks offer checking accounts where the monthly fee drops to 0 if you meet one condition, usually a qualifying direct deposit. At Bank of America, the Advantage Plus account charges $12 a month, but that fee is waived if you have at least one qualifying direct deposit of $250 or more each statement cycle. Qualifying deposits include salary, pension, or Social Security benefits. At Chase, the secure banking account charges $4.95, or nothing if you have $250 or more in qualifying electronic deposits each monthly statement period. At Wells Fargo, the monthly fee on a Prime checking account is $25. On Premier Checking, it is $35. Now here is who this helps most, and it's both groups. If you're on a fixed income with a pension or Social Security deposit hitting that account every month, you may already meet the waiver condition and not know it. If you're comfortable, you may be paying a premium account fee that made sense when you were working and no longer matches how you use the account. The math is simple. Take $25 a month. That is $300 a year. Over 20 years of retirement, that is $6,000. A viewer wrote to me about this, a retired school secretary named Margaret, 72, outside Louisville. She was paying Bank of America's $12 monthly maintenance fee on an Advantage Plus account, even though her pension deposit already qualified as direct deposit. She confirmed the waiver condition, the fee stopped, and that was $144 a year she had been handing over for no reason. Here is your action step. Call your bank or walk into a branch and say this. Look at my current direct deposits and balances and tell me which checking account would eliminate my monthly fee. If you can switch me today, will my account number stay the same? One conversation. That is it. That is number 1. That is the fee most people see. The next one is the fee they keep paying without even seeing it as a pattern. Number 2. Out-of-network ATM fees. The misconception is that it's only a couple of dollars. And it is, every single time. That is exactly how it adds up. Chase charges $3 per withdrawal at a non-Chase ATM inside the United States, and $5 outside the United States and U.S. territories. Bank of America charges $2.50 each at a non-Bank of America ATM in the U.S. and $5 each in a foreign country. And those are just the bank's fees. The ATM owner often charges a separate fee on top. Here's the part most people miss. Some account types reimburse those charges. Wells Fargo Prime Checking reimburses one U.S. and one international non-Wells Fargo ATM fee per fee period. Wells Fargo Premier Checking reimburses them with no limit. This one helps the comfortable group most. Higher balance account holders are the ones most likely to already qualify for a reimbursement tier, and the least likely to have checked, because a $2.50 charge does not feel worth a phone call. It is worth a phone call when it happens 4 times a month. 4 wrong ATM withdrawals a month at $2.50 is $120 a year, before the ATM owner's fee even enters the picture. Over 15 years, that is $1,800. Your action step: call your bank and ask this: do I qualify for an account or rewards tier that reimburses non-network ATM fees? And if not, which ATM network should I be using instead? Nobody volunteers this information. You have to ask. That is number 2. ATM fees are the nickel and dime layer. The next one hits the moment you need the bank to issue the paper. Number 3, cashier's check and money order fees. The misconception: a cashier's check fee is just standard and unavoidable. It is not. The same piece of paper can cost one customer $15 and another customer $0, depending entirely on the account type. Chase's fee schedule lists the cashier's check fee at $10. But if you hold a Chase Premier Plus checking account, there is no fee on money orders or cashier's checks. Chase Secure Banking also charges no fee for those instruments. At Bank of America, the cashier's check fee is $15, but it is waived for customers enrolled in Preferred Rewards. At Wells Fargo, Prime and Premier Checking customers pay no fee for cashier's checks or money orders. This is not automatic. Nobody at the counter stops and says, "Hold on, let me check whether your account waives this." The teller processes the request, the fee posts, and you leave. This one helps the comfortable group most. Official checks tend to come up in larger transactions: closings, estate payments, large purchases. And the viewers most likely to use them are also the ones most likely to already hold an account that waives the charge. They just never asked. 4 cashier's checks a year at $15 is $60. Over 15 years, that is $900. Not life-changing money, but money that should have stayed in your account every single time. Here is your action step. Before the check or money order is printed, say this: before you print this, tell me whether my current account waives this fee. If it does not, tell me which account does. Ask before they print, not after. That is number 3. That was a branch fee. The next one is a transfer fee, and it is bigger money. Number 4, wire transfer fees. The misconception: if you need a wire, you need a wire, and the fee is the fee. That is not true. The fee changes depending on the account, the method, and whether anyone told you a cheaper path existed. At Chase, a domestic outgoing wire costs $35 with a banker and $25 if you send it online. An incoming wire costs $15 unless it was originally sent with a banker or through Chase.com or Chase Mobile. At Bank of America, a domestic outgoing wire is $30. A domestic incoming wire is $15. An international outgoing wire sent in US dollars costs $45. And here is a detail most people never see: an international outgoing wire sent in the foreign currency carries no wire fee, though exchange rate markups apply. At Wells Fargo, Prime and Premier Checking customers get the outgoing wire transfer fee waived entirely, and incoming wire transfers have no fee. This one helps the comfortable group most. Wires come up in real estate closings, family support transfers, estate cleanups, and large gifts. The kinds of transactions where the customer is focused on the transfer itself and barely notices the $30 or $45 line item underneath it. 2 domestic outgoing wires a year at $30 is $60. Over 15 years, that is $900, for a fee your account may already waive. Here is your action step. Before any wire, say this to the banker or wire desk: tell me the exact wire fee in dollars for this transfer, whether a cheaper method is available, and whether my account already qualifies for a waiver. Do not assume the fee is fixed. Ask every time. That is number 4. And now I need you to hear something, because the conversation changes here. Everything I have covered so far, the monthly maintenance fee, the ATM charges, the cashier's check fee, the wire fee, all of that is bank policy. The bank chooses to charge it, the bank chooses to waive it, and the bank chooses not to tell you. The next one is different. For part of it, federal law is supposed to start on your side. Number 5, overdraft fees on debit card and ATM transactions. Here is the misconception, and it is a costly one. If the bank charged it, it must mean I agreed to it. Not necessarily. There is a federal regulation called Regulation E. In plain English, it is the rule that governs electronic fund transfers. debit card swipes, ATM withdrawals, direct deposits, automatic bill payments. And one of the things Regulation E says is this. For ATM and one-time debit card transactions, the bank cannot charge you an overdraft fee unless you affirmatively opted in. That means the legal default is supposed to be no fee on those transactions unless you actively said yes. The CFPB, the Consumer Financial Protection Bureau, issued a circular in 2024 stating that if there is no proof of affirmative consent, the institution may be violating the law. Now look at what these fees actually cost. Chase charges $34 per overdraft transaction, up to 3 per business day. That means one bad day can cost you $102. Bank of America charges $10 per overdraft item, up to 2 per day. And Bank of America does not charge an overdraft item fee at all on everyday non-recurring debit card transactions or ATM transactions. Their Advantage Safe Balance banking account carries no overdraft item fees whatsoever. This one hits the fixed income group hardest. If you are living deposit to deposit, one overdraft a month is not a nuisance. It is $408 a year at Chase's rate. Over 15 years, that is $6,120. And some of those charges may have been on transactions that required your opt-in that you may not remember giving, or that may not have been properly obtained. The overdraft setting does not remove itself. It sits there, quietly, charging every time the balance dips below zero on a qualifying transaction. Here is your action step. Call your bank or go into your online settings and say this. Am I opted in to overdraft for ATM and one-time debit card transactions? If yes, remove that opt-in today and send me confirmation. If you do not want that coverage, remove it. If the bank cannot show you opted in, that is worth a question. That is number 5, and even this is not the most dangerous one, because the last item is where a single missed deadline can cost more than a year of these fees combined. Number 6. This is the one I told you to stay for. Fees and losses tied to unauthorized or erroneous electronic transfers. The misconception: once the money is gone, it is just a fraud problem, and all you can do is hope the bank helps you. That is not how the law reads. Regulation E does not just cover overdraft opt-in. It also sets up an error resolution process with real deadlines and real consequences. For the bank, not just for you. Here is how it works. If you spot an electronic fund transfer that is unauthorized or incorrect on your statement, and you notify your bank within 2 business days of learning about the loss or theft, your liability can be limited to $50. Miss that 2 business day window, and your liability can rise to up to $500. And here is the deadline that matters most. You must report an unauthorized transfer that appears on your statement within 60 days of the date that statement was sent to you. Miss that 60-day clock, and you could lose protection on later unauthorized transfers entirely. Once you report, the bank generally has 10 business days to investigate. If it cannot finish in 10 business days, it may take up to 45 days, but only if it provisionally credits your account within those first 10 business days and meets the notice and use of funds rules. And when the bank confirms that an error occurred, it must correct the error and refund any institution fees caused by that error. This one helps both groups. Fraud and electronic errors do not care whether the account is large or small. But the fixed income viewer feels it faster because one unauthorized transfer can wreck a month's budget. And the 60-day clock does not pause because you are busy or overwhelmed. Miss that 60-day statement clock once, and one later unauthorized transfer can become a $400 loss or more. Here is your action step, and I want you to write this down. Call your bank's fraud or dispute line and say these exact words. I am reporting an electronic fund transfer error. Here are the date, amount, and why I believe it is unauthorized or incorrect. I want the Regulation E error resolution process started today. Those words matter. They tell the bank which process you are invoking. The deadline to remember is 60 days from the statement date on which the error first appears. That is number 6. So here is the full picture. The monthly maintenance fee that keeps coming out because nobody reviewed your checking account. One conversation to switch or confirm the waiver. The ATM fee that multiplies because you kept using the wrong machine. One call to find out if your account reimburses it. The cashier's check or money order fee that disappears on the right account. One question before the teller prints it. The wire fee that turns one transfer into a $25 to $45 mistake. One ask to find the waiver or the cheaper method. The overdraft charge on debit and ATM transactions that may depend on a setting you never meant to keep. One change in your account settings. And the error resolution clock that can force money and fees back into your account, but only if you move within 60 days of the statement. Your bank does not volunteer the cheapest checking account. The ATM does not tell you the better account would have reimbursed this. The teller does not stop the cashier's check fee unless you ask. The wire desk does not assume you want the lower cost path. The overdraft setting does not turn itself off. And the regulation e-clock does not pause because you are busy. Being allowed to avoid a fee and actually avoiding it are two completely different things. The gap between them is information and action. Think of one person: a parent, a neighbor, a sibling, a friend from church who is over 65 and still using the same checking account they opened years ago. Share this with them, not because they are bad with money, but because the odds are very good they have never had the bank line up the account, the settings, and the rules on one page. That is what this was. Send it to them today. Subscribe. Share this with someone you know who is still paying fees they do not have to pay, and I'll see you in the next one.